If you had invested $1,000 with Warren Buffett in 1965, you'd have over $30 million today. But Buffett isn't the only investing genius out there. What if I told you there's a guy who turned $10,000 into $30 billion, or another who averaged 66% annual returns for over 2 decades straight? These investors didn't just get lucky, they cracked the code on how money really works. And today, I'm breaking down the greatest investors of all time, and more importantly, what you can steal from their strategies. But if this is your first time on my channel, then hi, my name is Galbraith, and I'm a finance professional based here in New York City. I make content just like this every single week, aimed at helping you level up in your career. So make sure to subscribe so you don't miss any of this content. And now, let's get into the video. Warren Buffett is the king of long-term investing. He built Berkshire Hathaway into a trillion-dollar empire by sticking to a simple philosophy: invest in businesses with strong fundamentals, competitive advantages, and great leadership, and then do nothing. Berkshire Hathaway has delivered an average annual return of 20% since 1965, significantly outperforming the S&P 500. Some of Buffett's best investments include Coca-Cola, which he bought in 1988, and his holdings are now worth over $25 billion. Apple, which he invested in just in 2016, and his holdings were about $150 billion before he started selling off a little bit more recently. And then American Express, a core holding since 1994, which is valued at roughly $45 billion. Buffett's investment approach is heavily influenced by Benjamin Graham, the father of value investing, but he evolved it by focusing on quality businesses rather than just undervalued ones. As Buffett famously said, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. The key takeaway here is to stop chasing short-term gains and focus on quality businesses that can compound wealth over decades. Jim Simons, known as the Quant King, took a completely different approach. A former mathematician and codebreaker, Simons founded Renaissance Technologies and built the Medallion Fund, which averaged 66% annual returns for over 30 years, making it the most successful hedge fund ever. If you had invested $1,000 in the Medallion Fund at inception, it would be worth over $20 billion today. Unlike traditional investors, Simons didn't rely on balance sheets or earnings reports. Instead, he used machine learning, statistical arbitrage, and pattern recognition to identify market inefficiencies and execute high-frequency trades. His team at Renaissance included physicists, computer scientists, and cryptographers, almost no finance professionals. The lesson here: even if you're not a quant, understanding data trends can give you an edge over emotional investors. As I'm sure you all know, life in New York City can be expensive. So much so that earlier this year, I tried cutting back on my daily trips to the coffee shops to save money. Well, that was not fun at all. It turns out this is a luxury that I do not want to sacrifice. But fortunately, I found out about Mint Mobile, who is actually the partner of today's video. Mint Mobile offers premium wireless for just $15 a month, and you can get high-speed data and unlimited talk and text on the nation's largest 5G network. You may not know this, but I actually record all of my content from my phone, so it was really important for me to be able to keep my phone and my number, and fortunately, Mint Mobile lets you bring your existing device and phone number onto their service, which makes it super simple to switch. And take it from someone who is constantly watching YouTube podcasts and streaming sporting events while on the go, Mint Mobile's wireless service is lightning fast and actually works better in more areas than my last provider. So if you want to save some money without the sacrifice, go to trymintmobile.com/Galbraith or check out the link in the description to get a premium wireless plan starting at $15 a month when you purchase a 3-month plan. And now, for a limited time, you can actually get $60 off Mint Mobile's 12-month unlimited plan. This offer won't last long, so lock in a year of unlimited service today on the nation's largest 5G network for just $25 a month. Thanks again to Mint Mobile for partnering with me here, and now let's get back to the video. Ray Dalio, the master of risk and diversification, built Bridgewater Associates, the world's largest hedge fund, managing over $150 billion in assets. His all-weather portfolio, which is designed to perform well in any economic environment, has averaged about 7 to 10% annual returns with significantly lower volatility than the market. Dalio correctly predicted the 2008 financial crisis, positioning Bridgewater to profit when most investors were losing billions. His philosophy revolves around radical transparency and studying historical cycles to anticipate market moves. One of his most famous concepts is the economic machine, the idea that economies function in predictable cycles based on credit, productivity, and psychological factors. Diversification, according to Dalio, isn't just about owning 50 stocks, it's about owning assets that perform differently under different conditions. His investments in China and commodities ahead of the 2020s global inflation surge showed his ability to hedge against economic shifts. Peter Thiel, venture capital's billionaire contrarian, thrives on asymmetric bets, investments with massive upside and limited downside. He made one of the greatest investments ever, a $500,000 bet on Facebook in 2004 that turned into $1 billion. He was also an early investor in PayPal, which he co-founded and later sold to eBay for $1.5 billion. More recently, Thiel invested in Palantir, where his stake is worth over $8.5 billion, and SpaceX, where his investment through his venture capital fund, Founders Fund, is argued to be worth about $15 billion. Thiel's contrarian approach is simple. The best investment is in something no one else believes in yet. He also follows the concept of secrets, ideas that are fundamentally true but not widely accepted yet. His investment in Facebook was based on the belief that social networks could be billion-dollar businesses before anyone else believed it. The takeaway, in startups and even in public markets, the biggest winners are often the ones that most people doubt. George Soros is the man who broke the Bank of England. He made $1 billion in a single day by shorting the British pound in 1992, forcing the UK to exit the European exchange rate mechanism. Over the decades, his hedge fund, Soros Fund Management, has averaged 20% plus annual returns. His theory of reflexivity explains how investor emotions can distort markets, creating bubbles and crashes. Unlike most investors who try to predict what a company is worth based on fundamentals, Soros focuses on feedback loops between perception and reality. He was also an early investor in Eastern European economies after the fall of the Soviet Union, capitalizing on undervalued markets with high growth potential. The best investors don't just read balance sheets, they read people and market sentiment. Stanley Druckenmiller is the master of betting big when opportunity strikes. While working under Soros, he helped execute the short of the British pound, making over $1 billion in a single trade. As the head of Duquesne Capital, he averaged 30% annual returns over 30 years without a single losing year. One of his greatest trades was foreseeing the 2008 financial crisis and betting against mortgage-backed securities, making billions. Druckenmiller's philosophy is simple. It's not about how often you're right, it's about how much you make when you are. He follows a macro investing strategy, analyzing global economic trends and placing high conviction bets when the market misprices risk. His biggest wins include massive bets on tech stocks in the early 2000s and shorting the dot-com bubble before it burst. Druckenmiller teaches that when conviction meets opportunity, you size up. So, what can you learn from these legends? Buffett teaches us to play the long game. Simons proves that data-driven investing can be incredibly powerful. Dalio emphasizes the importance of intelligent diversification. Thiel shows us the value of asymmetric bets. Soros highlights how market psychology can create massive opportunities. And finally, Druckenmiller reminds us that when you have conviction, go all in. You might not have billions to invest, but you can apply these strategies today. Which investor strategies do you connect with the most? Let me know in the comments and make sure to subscribe to the channel so you don't miss any future uploads. I'll see you in the next one. Peace.